Hey there, Joe Gill here with My Phoenix Real Estate and Keller Williams Arizona Realty. Let's get into the stats for March of 2024. Just finished the class this morning, so here are the highlights. As always, feel free to follow our Facebook page. We're going to do weekly updates where we just put the high level to active, under contract, contract ratio, so you can see the fluctuation, give a little bit of editorial and tell you kind of which direction things are going, but it's a good way to keep up with it and to see when our class is coming up and when we have new videos. We'll put a link down in there in the body. So everything that I showed today is going to be coming from the Cromford report. It's just an easy way to make sure that I'm using the same source for all this information. Let's start with active, right? So active is anytime someone says supply, housing supply, listing supply, home supply, they mean active listings. Sitting on the shelf at Costco, it's free for anyone to come by and grab, as long as they have the money for it. And yes, I know that this is not a picture of Costco. Next time I'm in Costco, I'll take my phone out and shoot a picture of the toilet paper. That way people can try to figure out what exactly I'm doing. All right, so let's talk about active listings. We currently sit at 15,343. We've been climbing since the beginning of the year. We started in the 13,000s. Now we're at a little bit over 15,000. Now that's not a huge jump, but it is, contrary to the past 4 years and the patterns that we usually see. So we'll usually see 1 or 2 weeks of some new listings coming on, but then the demand typically will start to eat that away, right? So this year is a little bit different. We're starting to add starting January, and it's continually going up. Now it is stabilizing, right? So the past 3 weeks, those dots are pretty close to each other. So we're not completely loading it on, but it's definitely not decreasing like it has in the past couple of years. One of those contributors is going to be new listings, right? New listings to the market. So if you look in the January block, I've got I've got 21, 22, 23, 24. 24 in January, we listed more homes than the previous 3 years. So that was a potential trend that we were watching, right? But now you look at February, and February, there's some lagging data, so it's probably going to be about 7% difference. We're going to be more likely at 8,300 for the month of February once all those data points land. But what that tells me is that is sort of a receding pattern. So I don't really see us ripping through and then having 10,000, 11,000, 12,000 listings coming to the market. But that's definitely something to watch. I'm curious to see how many will load up in March. So let's talk about under contract. That's your demand. Anytime someone says buyer demand or housing demand, that's buyers not just out there looking. That's buyers that said, I'm serious enough to put this under contract. They wrote a contract, they submitted it. Seller said, okay, let's go under contract. And they put it in a pending status. And now we're tracking that. So that's actual buyer demand, right? It's the TP rolls in the cart, but you haven't left the store yet. You haven't closed escrow and gotten the keys to your new house. So if you look at the past, 8 or 9 years, we've got, anywhere from 4,000 to 9,500 as the starting number of homes under contract in the beginning of the year. So this year, we've got 4,860. That's our first. And we haven't really broken through any of the previous years. We've been putting less homes under contract than every previous year over back to 2015. So we are slower in volume, slower in demand. However, we have a relatively lower supply as well. So that's why we don't have a crazy market fluctuation or a market correction happening right now. I thought it was interesting to see what that delta looked like. That's what D stands for. So I was curious to see the difference between this year and last year during the same week. So we started off, difference of 357, then 224. Maybe that was going to cross and we were going to start to beat 2023, but then we broke away. 688, 781, 725, and then it's chilling out a little bit. So we currently stand at 7,900, a little bit above, and it's hard to tell if we're going to break through that. I think the only thing that would really push us above that line is if we have a crazy improvement to interest rates and all of a sudden affordability changes. So speaking of which, let's take a look at last year, right? So that's the one on the top. So we had started at around 6.5, and then it dropped all the way down to just above 6. So just that fluctuation in the first month of the year gave that boost of buyers to say, okay, let's hit it. Let's make this happen while we can. Let's get it while the getting's good. You can see how they started to, that buyer demand increased. It went up to, I don't know, probably 8,200, 8,300, maybe 8,500. But then this year, the one on the bottom, 2024, we sort of bounced around a little bit. We never made it below 6.5, so we were right at 6.6 or so. And then at the tail end, here in the beginning of February, it jumped up. So, this is 2 months worth of interest rates to see what it's doing to buyer demand. And so far, it looks like it's tamping it down just a little bit, more than we thought it would, right? Because we sort of expected them to plateau and then maybe even fall in March and April. But it's hard to say whether that's going to happen. Sold volume, closed units, this is what actually did sell. So you can have something under contract all you want. As long as it makes it to the closing table, those people are able to get their new house, the sellers can walk away with their money, you actually have a closed unit. So now that you've put the TP rolls in your car and you're about to drive off. These are surprisingly similar to last year. The fact that we have a little bit less homes under contract, it's interesting to see January and February closing at almost the same number as last year. But you'll see that we're, seasonally, we are projected to close more units up to, June, and then start to tail off after that. Again, shoot this, follow us on Facebook, tell us what you think, share what you know. Supply and demand, those don't matter unless you understand the relationship between them, because if supply drops and you're like, oh my gosh, well, what if demand dropped also? And that relationship basically just shifted volume, right? So you still have the same heat, you still have the same buyer and seller behaviors, but you just have fewer of them. It's kind of what's happening right now since we had that adjustment in 2022. Starting at around 35, we've made it up to the 50s, so we're in the low 50s right now. It doesn't look like we're going to exceed it. So check out what happened last year. We had a little bit of a plateau in the beginning of March last year, and then we continued to creep up. But then it just got stronger and stronger all the way up until April. We sort of maxed out in the lower 80s. Lower 80s is a pretty strong market. That means you have multiple offers for the most part. You've got a lot of demand. And then seasonally, you'll see that taper down July, August, and then it sort of slows down. So we're not off track. We're just a little slow, a little bit low. Cromford Market Index, this is the one that is forward looking. This is the crystal ball. You can see that we've got some continuity in 07 and 08. You see continuity in 2023. And then 2024 is going to be an interesting one as well. But 2022, that was our sort of adjustment year, and you can see that that's a wild roller coaster. So this is what the market index looked like in 2023. This is the pink line. We were sitting pretty hot. We were gaining traction. Then we finally topped out in the 160s, and then fell pretty briskly after that to finally sort of bottom out just before we hit 100, right? So this year looks like we've sort of plateaued and are stable above 115. It's best I can tell you. It doesn't look like we're going to go crazy one way or the other, but it's definitely one to watch. Now here's why it's one to watch. This is sort of showing you how this predictor shows up in the appreciation, right? So anything I highlighted in yellow, this is all Cromford Market Index, and then the annual price appreciation, right? So I highlighted everything that was between 0 and 10%. So those are just times of stability, right? Decades of stability. Well, maybe not decades. I guess 2014 to 2019. That's a good chunk. That's a 5-year stint of us having a relatively predictable market to operate in, and then all of a sudden, COVID hits us, and bam, we got to adjust, right? So we could be in an area of stability. You can see that we've got Cromford Market Index below that 10% line. You've got the appreciation below that 10% line. Maybe we hang out here for a little while. That might be cool. Let's see if that happens. Cromford Market Index per city. This kind of just shows you the hottest places to buy. So if you're a seller, you got to have a good plan still, but you're probably going to be doing pretty good. Chandler, Gilbert, Fountain Hills, Glendale. Now, when you look at some of these other outliers, let's go to this month and you start to see a few declines. So Fountain Hills, Scottsdale, Paradise Valley, Surprise, they lost a little bit of ground. Goodyear lost quite a bit of ground. Goodyear's a little bit smaller of a data set. There's still a lot of agricultural land out there, so there's not a ton of housing units to begin with. So anytime there's a swing one way or another, it just looks like it's a little bit more drastic. But anyway, we're kind of cruising along. Some of these outlier towns, outskirting towns are in the 70s, and some of these main metro towns are super hot in the 200s, like Chandler. So that's the full range. Buckeye out there, the little town that could. I think they're still working on getting some demand out there. So that's about it in a nutshell. That's March. So next month in April, we're going to have a full quarter worth of information. So we'll take a look at, just like I did, all these different data points, but we're going to look a little bit more about the bigger picture, stuff that's coming to Phoenix, some of the economic indicators that are here in town. We've got an election year. I'm not sure how much I'll talk about that because that sort of just throws a wild card into everything. But for the most part, I think we're going to have a pretty strong set of information just for this first quarter to sort of give an idea of what we're going to be looking at for the rest of the year. So if you want to know more information about your home, or if you're about to get out into the market and try to buy something, I'm happy to run through this with you in your specific area, your specific search criteria, and sort of get an understanding of what you're up against and what your strategy might be. So until next time, this is Joe. Talk to y'all soon.